What's up, traders? Welcome to another Smart Money Concept series. We're starting another one. Yes, it's going to run for about 4 weeks. We've got Nathan Jester and my friends there at Aerial FX coming on board here to share their insights into Smart Money Concept trading. Now, today's video, Nathan Jester is going to break down it in the simplest format he can possibly find. So if you don't get it from this, you probably never will. Now, he's not just going to do that, but he's also going to give a trade prediction for the coming week. This is New Zealand dollar CAD is what he's been challenged to find a trade for. So, folks, what we're going to do is each week is he's going to find a trade. Then the next week, we're going to break down if that trade played out. Did he get in? Did he get out? How did it work? You guys are going to get to see that in real time. So please do hit subscribe, hit like, click that notifications bell, and click all, and you'll be notified when that video drops next week. Now, talking about these future videos, they're also going to be covering supply and demand flips, high time frame high time frame analysis for higher trades, drilling down to those lower time frames to get your entry, what kind of entries you're looking to get, and trade management and all that sort of stuff. So that's all coming up in the next few weeks. But for now, let's get on with today's video about simplifying smart money concepts trading.
Hey, what's going on, ladies and gentlemen? Welcome back to another Aerial FX Smart Money Concepts video. In this video, I'm going to be going over a very unique approach to smart money, going to try to simplify it as much as I can for you, because that is the whole point of trading, especially when you're learning, is to try to understand things in the most simplistic form. And trading does not have to be difficult. As long as you understand the basic concepts and can apply it the correct way, trading can be very easy and rewarding. So in this video, I will be going over a major problem that a lot of traders, especially in their beginning phase, try to understand is, I'm sure a lot of you have taken courses out there. You probably are a part of a few mentorship programs, but the problem is that you can't seem to apply what you have learned on the charts. So you could watch a YouTube video, a course video, or whatever you watch on a day-to-day basis, but still have trouble putting the pieces together on a blank chart. And this is probably one of the biggest setbacks for a lot of beginner traders. And I want to try to clear up this problem by providing a step-by-step approach to the way that I personally trade alongside the institutions. Okay, so this is Smart Money Concepts Simplified. This is going to be a step-by-step approach trying to give you the clearest understanding of not only how we trade, but how smart money works in general. So we're going to be highlighting quite a few trades that we have took within our VIP community. And I'm going to be going over a couple of hindsight opportunities that you could have taken advantage of based upon the concepts that we teach on a day-to-day basis. So smart money does not have to be difficult. As long as you understand the concepts and can actively apply them to the charts, trading can be quite rewarding. But the biggest problem is being able to apply it consistently. So that is what I'm going to try to clear up here. A step-by-step guide to top-down analysis to make your trading very streamlined so that you can attack the markets with ease. All right. Now, transparency is absolutely key. I don't believe in hindsight types of trades unless it is for educational purposes. But at the same time, if I am claiming to make a specific trade go into profit, then that is going to have to be transparent. I don't like non-transparency. There are a lot of fake traders out there, a lot of scammers who want you to purchase their product. In this video, this is just for educational purposes only, and I'm going to be going over the exact trades in which we took within our VIP program here at Aerial FX. Not all of them will be from the VIP channel, but I will note which ones are and which ones are not. And if you want a more in-depth look at the types of trades that we take on a day-to-day basis within Aerial FX, hop over to our website, www.aerialfxtrading.com, and check out this cool video that I made for the month of September. I will show you exactly how we made 59.6% this month trading smart money concepts. This was the month of September. This is a verified, audited track record of all of the trades. I go through exactly how I trade, all of the setups with all the confluences. So it's not only a learning experience, but it's also providing you transparency into exactly how we send our setups every single day within our community. It really does a full audit of my VIP Discord channel, going over every single piece of analysis, every single trade idea and setup, all the winners, all the losses, total it all up. And we did 59.6% if you followed along to the exact T. So a lot of our members are seeing tremendous success trading smart money concepts because it provides a very simplistic, streamlined approach to the markets. You can understand exactly how and when to enter based upon institutional formations, but it's the exact way the markets move. You could trade using smart money with any asset class, futures, stocks, indices, cryptos, Forex, whatever you have. The market is moved through volume and liquidity. So as long as we understand that and who's manipulating the market, we can look for the clues that they leave behind and then trade alongside them to provide very great risk to rewards and high win rate trades. All right. So check check out this video for the full breakdown. It's probably about a 2-hour long video, but it is very, very valuable, guys. A lot of nuggets there. Do check that out if you have some time. But in this video, I'm going to be going over just a few trades that we have been taking within our VIP community. Also going over some hindsight trades with just NZDCAD. Okay. So hopefully this will provide an understanding of how you should approach the markets within smart money trading specifically, and how you can attempt to really approach the markets with any type of strategy, as long as you understand the fundamental basics and components of smart money. All right. So really our step-by-step comes down to first understanding the higher time frame structure. So what I'm going to do is I'm going to go over each and every step, and then every single trade that I go over here, I'm going to apply those steps into the way that I trade so that you can take that and actively apply it on a day-to-day basis within your trading. Okay, so first we have to understand the higher time frame structure. Then we have to understand the objective. Where is price going? Then we scale into the lower time frame structure, and we have to understand, are we following the higher time frame trend, or are we in a pullback phase counter trend? If we are following the higher time frame trend, what supply or demand zones are valid in order to take continuation trades? What is the overall objective that price is going to be pushing into? If it is a counter trend trade or a higher time frame pullback in the opposite direction of the overall trend, are there opportunities to trade counter trend that meet our trading rules? Is there room to go to the upside or downside to hit the higher time frame area of interest to then buy or sell it in the overall direction of trend? For either one of those, both need proper confluences for entry. So these proper confluences come down to these institutional concepts that we teach: liquidity, imbalances, time and price, liquidity inducements, Wyckoff, supply and demand levels, and supply and demand flips, all in conjunction with one another. Then it comes down to scaling into those positions to potentially add positions if there is a proper re-entry level for a better risk to reward. Then it all comes down to take profit and stop loss placement, having those appropriate levels, and then trade management, managing the trade as we go. And then that is it. Repeat the process all over again, and now you're one step closer to profitability. So go back and rewatch that minute of video here, and go back and write down those steps that I just went over. So very quickly, higher time frame structure, number one. Number two is overall objective. Where is price heading? Where is price going? Number three, lower time frame structure. Are we following higher time frame trend, or are we in a pullback phase? If following higher time frame trend, what supply and demand zones are valid in order to take the continuation trades? What is the overall objective there? If it is counter trend, are there any opportunities to trade counter trend that meet the rules? Is there room to go to hit the higher time frame area of interest? Number four, understanding institutional concepts. Where are those supply and demand levels? Where is the liquidity? Where are the imbalances? Are you trading with time and price? Is there Wyckoff accumulation or distribution schematic? Are there any supply and demand flips? Number 4 or 5, I forget what number I'm on. Scaling in to add positions. Is there a proper re-entry for a better risk to reward? Number 5, take profit, stop loss placement. Number 6, trade management. And number 7, congratulations, you just did everything correctly. Okay, so every single trade that I go over, we're going to be analyzing those step-by-step approaches. So our first trade that we're going to be discussing here is, simply put, well, actually, let's go over top-down analysis very quickly. That is something that we have to talk about. Step-by-step, higher time frame structure. So in this case, while we were trading all along in here, we can see clearly that we are bearish. We're making lower lows and lower highs. So we are in a bearish market. So we should be looking for overall higher time frame shorts. Now, it's very important to understand objective points, because we have to know where price is most likely to come into before higher time frame moving in the opposite direction or reversing. Because this is where we just have to scale out, and we have to see where that is. Now, at this current time, we were trading in this region of price. So we were looking to attack these prior lows. And as price was pulling back, and I'll go over this in a little bit, I'm just zoomed out here. We're first looking to attack 0.79. That is a psychological level within NZDCAD, and that is below the sell side liquidity that we formed. All right, so that would have been an area of objective. But if we scale out even further, if we go to the weekly time frame and just see where could price come into to the left before potentially making a higher high, because on the weekly time frame, we are making higher highs and higher lows. Now, what I expect is to get down into discounted price. It's the same thing, just on a higher time frame, right? So all the lower time frame confluences are just the same as the higher time frame confluences, because the market is very fractal. So on the higher time frame, on the weekly time frame, we can see that if price is going to go long, we probably want to sweep some sell side liquidity. You know, there's some imbalance within here. There's a demand level that's unmitigated. We can see this demand level has been mitigated. This demand level has been mitigated here. But we have another unmitigated level of demand. So, but when we actually created this higher high, you can see we created a high. We failed to generate a lower low compared to this low, and we made a higher high. That last selling volume right here, sell to buy, we had a repricing, meaning a little bit of a push down that did not create a lower low, and then a higher high was formed. So that creates the demand. And there's imbalance within here just because there's just straight buying volume between this area. There's no selling that was offered within this region of price, creating that imbalance. And guys, I know I'm talking fast because I have a lot to go over. So please rewatch this video multiple times. You are not going to want to miss out on this information. This will tremendously escalate your trading. I am so proud of all of you VIP members who have been taking advantage of these setups and learning the material, because that's why you join. That is why you are, a part of our community, is to learn and become self-sufficient. So congratulations to all you guys. Big shout out to you, and big shout out to Cam Hawkins from Trading Nut for allowing me to continue to post on his channel. I do appreciate being able to provide all of you value when I can, trying to help you understand the way in which I trade.
Hey folks, ever wonder what broker I use? Well, I use Hanko Trade. It was a no-brainer because I was looking for a broker with good trading conditions and one that wouldn't restrict my leverage. Now, by joining Hanko Trade, I've also cut down my trading costs significantly with their super low commission of just $1 per 100K. You can learn more at hankotrade.com or just click the link I've put in the description.
So this was an area of demand, right? Higher time frame. So that is definitely an area in which we can push down into. So that will probably take months to maybe a year or so if price does actually continue short. So this is going to be a higher time frame area of interest. But the most recent one was that lower time frame level of demand, so 7 to 550. But as we continue short, we understand that these are our higher time frame swing points, right? These are our higher time frame swing points. So could we have an overall pullback, or at least when we were trading in here, an overall pullback up into premium prices up here before we have shorts? That's a definite possibility. So we have to first understand our objective points. Where are we headed? But at the same time, what is the probability that price may break structure lower time frame? Because this is lower time frame structure in here. We could break, pull back higher time frame before continuing. So if we're going to be taking take profits, where are we most likely to reverse from? Well, higher time frame, definitely at these objective points. But because we have the potential of potentially pulling back, we can be taking profit at psychological levels. So 0.79, 0.78, 0.77, all the way down. So we're taking profit because who knows, we could reverse at 7.8 and then have an overall pullback back up into the supply on the weekly time frame to then continue short. The overall target would be 7.2550 or probably 6.6, but there could be higher time frame pullbacks along the way. Okay, so we don't want to ever have a losing trade or a winning trade go back to a losing trade. Okay, so we need to be taking partials as we go. And now, for the sake of this video, I'm not going to try and attempt to calculate partials here. So what I'm going to do is every single trade that I am going to talk about, the percent return for that trade is either going to be -1% for a loss, or it's going to be whatever the profit was for the entire trade that hits overall take profit. I'm not going to consider partials here just because it would take me too long to actually calculate the full percent return. So, there's ups and downs to that. The downside is that, obviously if we're in a trade, let's just say we're in from here, like we did take, partials will have been taken all the way down. However, I'm only going to calculate the total percent return when we finally come into that overall take profit. Now, the upside to that is the ones that do, we move take partials and move stop loss to break even, then price comes back down and hits break even though we did make some money when we took partials. I'm not going to count that as a winner for the sake of not, calculating partials there. So ups and downs for both of them, but I'm going to try to give you a general idea of the total percent return that we can be taking advantage of within these trades. All right, so our first one, since we are counter trend or higher time frame bearish, and we haven't hit overall objective yet, we can be looking at further shorts. So as we were trading in this level of price, we can see that this is a pullback. Higher high, higher low, high, low, high, low, high, low, high. Okay, so this is the lower time frame structure. So that goes from higher time frame structure, objective, lower time frame structure. Are we following the higher time frame trend, or are we in a pullback phase? In this case, we're in a pullback phase, but when we finally break here, create a lower low, that invalidates this demand. Why is this demand invalidated? Because every time we make a higher high, we subsequently should make a higher low, reacting off the prior demand zone to make another higher high. But in this case, we failed to make a higher high. We did not break above this level, and we made a lower low, invalidating this demand and then turning demand into supply. So this is our higher time frame supply level. So what I just did is I zoomed in to a lower time frame to see that this candlestick was an area of supply. We also have imbalance within this wick and then this wick in here. When we pushed up here, we didn't fill the imbalance. We actually created liquidity to take later. Why is liquidity created prior to levels coming up and mitigating? This is because the institutions need to free up liquidity in order to place their positions. Because if they're selling short here and now they want to sell short again upon a pullback to get a better price, they want to be able to place all of those contracts and all of those orders at this particular region, right? So in order to do that, there has to be enough liquidity for them to do that, or else they'll slip. They won't have enough liquidity to be actually getting at that price. So they have to build liquidity like this in the form of equal highs. So retail trader resistance in this case. And then they go and sweep the liquidity. So now there's enough liquidity there because as retail traders are forced to sell back their position to the market or buy back their position to the market, depending on which direction you're trading, right? Because if your stop loss is above this level and price comes back up here and you're selling, you're forced to buy back your position at that price. That's what causes your loss. That's why you see a negative dollar amount in your MT4, MT5 account, right? Because you're forced to buy back price at a higher price. That's why you have a stop loss. Okay, so when that happens, that liquidity is freed up. Now the institutions have that liquidity to be placing all of their orders at that particular price, which is why they sweep it very quickly and they come short. That's why they don't have to keep chopping around and keep coming back up to that same level to enter into the rest of their positions before going short. That's why we don't oftentimes see consolidation before continuations. We see sharp movements, okay? We see buys to sell or sell to buy. In this case, we're buying to sell because we're in a downtrend. So that was our first area for entry. I did not take this within the VIP. This is just one of the hindsight trades that we talked about, but stop loss would have gone above the previous swing point right here because that's the start of the supply. That's when we failed to generate the higher high. And then the lower low, we're targeting overall 0.79, okay? So 0.79 would be just a lower low in the sequence, right? Just a lower low and psychological level, okay? So in this case, this is a 1 to 4.6 risk to reward. So that would, I'm just going to write that down here. Our first trade, 1 to 4.6. I'm going to tally everything up at the end, and I'm going to show you guys all of the whole percent return for the ones that we took within our VIP, the ones that we are taking hindsight here, just showing you the concepts and how you would go about trading it. And then I'm going to show you the total percent return that if you followed NZDCAD, since the start of June all the way to present day, I'm going to show you what kind of return you could have had. Now, I'm risking 1% here, right? We need to be using good risk management. 1% is the universal, in my opinion, universal percentage that we need to risk per trade. No more than 1%. You could go 0.5%, you can go 0.25%, you can go 0.75%, but no more than 1%, in my opinion. So we had the liquidity run, huge buy to sell. Okay, we've come up and mitigated that supply, right? Because that demand to supply flip, beautiful entry. Now we're going short. And now we're looking at hitting take profit at 0.79, and we can see that we just missed it here. But when we had the pullback, we did continue all the way back down, and we ended up hitting take profit. Okay, so now we can see that we've had a huge buy to sell. So this becomes our new supply zone. Okay, so this is our last buying volume. It's also sponsored by the institutions because they had to buy price in order to sell it off again. However, intermediate structure would say, okay, well, we've come up and we've mitigated this supply here with these wicks and created this supply. Okay, so now this is another region of price that we're looking to take trades from, right? So continuing with the overall trend, because now we're not in any pullback phase anymore. We're treating it as overall trend. So now we can be looking for the nearest supply and demand zones to be taking trades from. So in this case, we're selling off, so we need to be looking for supply zones. So this is a level of supply, and also this is a level of supply in here. So those are the areas, once we make a lower low, we can be looking to pull back into to look for shorts. And we can be placing our positions here, maybe one position there and then one position there. And heck, even so, even if I lose this position with stop loss right above that high, I target 0.79 even. Or maybe, once we do come back down in here, we're targeting 7.7 next. I believe that's what the next target was. I think that's what I talked about in the video that I made for breaking down the VIP trade. So all of you VIP members, you can attest to that or correct me if I'm wrong here. I just don't exactly remember what the overall take profit was on this trade. But anyways, this is a 1 to 5.3. So if I lose this trade, I lose 1%. If I win 5.3%. Then I can take this trade. If we do end up losing, which we actually did, and this was just a hindsight trade, I don't think I took this live. Stop loss would have went here, and then overall take profit for this would have went at 7-7. So that would have been a 1 to 9 risk to reward. So it's okay to take multiple positions as long as you have your valid regions, because who knows, maybe we just would have had a small retracement just like we did into this supply level, and then we would have went short, and then we could have continued. That's always a possibility. If we have a deeper retracement up into this level, then we can definitely be taking advantage of that. And if we lose this one at 1%, then win this one at 9%, or in this case, 7 is down there. There we go. 9% minus 1 is still plus 8%. Even if I lost 8 trades in a row and won this one right here, I would still be positive 1% net. That is why risk to reward is so important. Pips don't matter, percentages matter. Okay, you can lose the majority of your trades and still be profitable. Win percentage doesn't matter. Okay, as long as you're hitting risk to rewards and you're overall profitable with the percent return that you get, you are overall profitable, even though you may not be win percentage profitable. You're still overall profitable making money because your risk rewards are high enough. So as we make a lower low, we're making lower lows, lower highs. And then on a lower time frame in here, as we scale in, we can see that we're starting to accumulate. So, very small lower lows, lower highs, and we're still trading short. We haven't broken structure yet. Then all of a sudden, boom, a very violent move to the downside, a very violent move back to the upside. And we've broken the counter trend structure. So now when this happens in the opposite direction of trend, we can consider ourselves counter trend bullish. This does not mean that we can break, pull back, and long it and just keep longing it, right? Because we're still overall bearish. So we need to be looking at the higher time frame structure, which is here, and then the lower time frame structure in which we could potentially take counter trend trades if our rules are met. So if you wrote down the step-by-step, that's a part of the step-by-step that we have here. So as we are continuing to fall, we can be looking for continuation short. Until we break structure, we need to be looking for shorts. Once we finally break structure to the upside, as long as we haven't come into an area of interest, meaning this one first, just like I said in my step-by-step, if there is room to go, meaning if we broke the structure here, came into this level and pulled back, just because we broke structure doesn't mean we should be pulling back to go long. Why is that? Because we came into objective right here. Now we should be looking for continuation short since we're higher time frame bearish. Okay, so now in this case, there is room to go to the upside. We haven't hit this level yet. So now that we're counter trend bullish, we can be looking for potential longs. Now, it doesn't mean just because you have an area of interest, it doesn't mean that it's going to come into it. So you shouldn't just nonchalantly just buy it randomly, thinking that it has to go up into that area of interest. What if it didn't? What if you were just buying it like right in here just because you wanted to, and then price just reversed on you? Well, there wasn't a necessary setup in the first place, so you shouldn't have taken the trade. You have to treat each trade as its individual trade and build confluences and have every trade meet your rules, no matter if you're going counter trend or in the correct direction of trend. Okay, so in this case, we can see that when we finally broke the counter trend, right, this was our original supply zone, and it failed because we made a lower low, but the new supply zone in here failed because we busted through it and we didn't make a lower low to continue with this trend, right? So we actually made a higher high. So now this supply is invalidated. Now we need to turn it into demand. Now, where does that come in? Huge liquidity run. So we can see that we're trading alongside structure, whether it's counter trend or in the right direction of trend. We have our higher time frame areas of interest right here and right up in here, because this was the area in which we swept liquidity. This is institutionally sponsored buy to sell volume, and this is just intermediate structure. So we're trading with structure first and foremost, and then we introduce the liquidity concepts. Now the smart money concepts come into play for our entries. So we can see that we have broken structure back to the upside. We haven't come into this level yet, so that will be our take profit. Okay, so huge selling volume, huge buying volume back up. I'm just going to get rid of this drawing so you can see. So huge sell, huge buy, reprice, continue. So this repricing is just making the market efficient before its continuation. So this is the area of demand you want to be taking your trade off of, because this is the selling volume that failed to generate a lower low in this downtrend, right? We failed to do that, and that's where we made the higher high. So now the supply in here, just get rid of all these drawings. The supply in here that we reacted from failed to generate a lower low. It flips to demand now. So where is that proper level? Well, now we can introduce liquidity concepts. So the huge selling volume to buy structure is shifted. Now we can be looking for imbalances, imbalance between this wick and this wick here. This creates a mini time frame level of demand. So that would be that level in which you would look to take a trade. Okay, so with this, let's create our risk to reward. So stops would go below the overall low and take profit would go right up into here. Our first take profit. You could do that and hold that for a 1 to 2.1, or you can hold it all the way back up into here, which I would have done because that's a higher time frame level. So 1 to 3.8, let's just say. So this one I did not take with my VIP, but that's something that you could have taken yourself. Now we continue. Now we're just continuing to trade. We made a higher high. We're starting to pull back. We can make a higher low now. Where is that? Our most recent demand zone, right in here. That's our most recent demand. Let me make this blue. There we go. Our most recent demand, our last selling volume that did not make a lower low here. This was the area in which we reacted off this demand before making a higher high. So the range is now between this low and this high. We pull back, mitigate that very nicely. This is another one that I did not take. This is just hindsight examples, but you still could have taken these trades. Stop loss would have went below this low. Overall would have went above right there to that level, a 1 to 8.7. Okay, so now we're continuing. We've made a higher high again. Still haven't come up into this level of interest yet. So we can continue to be looking for buys. Now we have bought this. Price comes back down and hits us break even because it did not. We would have taken partials here above the break-even structure for a higher high, and you could have placed stops to break even as well, which have went here, but price came all the way back down and hit us out break even. So in this case, I'm going to say 0% return for that trade, for that hindsight example. But as we can see, we still came into this demand just a little bit deeper, right? We came into it here, and we had a huge sell to buy. So I wouldn't treat this as a break-even structure short, because what did we do? We just had a clear liquidity run, very strong push down, and then an immediate reaction back to the upside. So we have to be careful with that. So we've made that higher high again. Still haven't come into this level. Now, this is the one we took with our VIP community. This one I do remember very clearly because we came into demand again. Okay, we came into demand. We've swept liquidity here. The sell side liquidity we swept. Coming into it, a higher high was formed. We can look at the counter trend structure. It's probably going to bring me back to current price. Yeah, so I'm just going to zoom all the way back out. Okay, cool. So now we're in this region of price here. Lower low, lower high, lower low, higher high. Breaking the counter trend, a lot of imbalance right in here, just straight buying volume. Now we can scale into this, and I see there is a wick here. Sell to buy. The wick is selling and buying at the exact same time. So let's do bar replay here, and let's scale in to what's going on. 10-minute, nope, not really anything. 5-minute, just going to keep scaling, and boom, right there. Clear sell to buy at 0.8005, but we have the psychological level at 0.8. But for the sake of this trade, I'm going to place it at the open of the sponsored candle, which is right here. Okay, so right there, stop loss would go, I'm going to say below this overall low. Okay, and now continuing up, that take profit would be at the overall higher time frame level, a 1 to 9. Okay, perfect take profit. Now I'm going to exit out of this, get out of bar replay mode here, go back to the higher time frames, and we can observe this trade as it goes. So a higher high was formed, so we should expect a higher low. Just continuing with the overall pullback. We came into this level, stops were at appropriate position, and it ended up going all the way back to the upside. And eventually, it did not come down and hit break even, just missed it, and we came all the way back up and hit our overall take profit for a 1 to 9. Okay, so that was the trade that we did take. So congratulations to all of you who have taken it. Now continuing. I'm going to get rid of all these drawings as we go to just clear everything up. So now we've taken that trade. We made the higher high. Now we finally come into that higher time frame level of interest. So you could have just set an initial sell limit there, stops above this high, right? And in this case, we would have went into really good profit, Could have taken partials, could have moved stop to break even, but for the sake of this video, since we didn't break the previous swing point, I'm going to say stops were at its original position, and we ended up coming up and hitting that stop loss. However, what you could have done to hedge your position is, just in case price did come up to its secondary level, even though we're in shorts here, you could have still bought it within this counter trend again to try to buy it again, just in case we did come up, which we did. Now, let's just say that this scenario did take place up here and price pushed up into it and we're still counter trend bullish, right? Would you buy it here to hedge your positions? You could, but I probably wouldn't, just because there's really nothing that price could come into next, because this is the last level. Since there's one here and one here, there's a potential that we come up to the second level, which is why hedging your buys with yourselves, or your sells with your buys, would be appropriate in this position or in this situation. So let's zoom in and look at it again. 15-minute time frame, and I'm not using the 15-minute as my area for trades. You look for every single time frame, but for the sake of this video, I'm just going to go to the 30-minute, 15-minute, but you have to look at every single time frame to see the best picture. So I'm going to say this as a huge sell to buy, reprice continuation. The repricing event took place within this doji candle. That's the demand level that failed to generate the lower low within this counter trend sequence here that we had. Okay, so that's when we made the higher high. So entry would have been right here again. Boom, stop loss below that low. Overall take profits are at the exact same place. And we can see that we came into that very nicely, had the reaction, the continuation all the way back up, and we hit that take profit very nicely for a nice 1 to 4.8 risk to reward. All right, so now we've come into that level. Okay, cool. Now we had the reaction. I wouldn't classify this as structure. It's more of just a supply level. I really wouldn't classify that as structure. But anyways, you could have seen the reaction and then pull back to take another position here. In that case, we would have hit stop loss just probably by the T, because it created equal lows. So I'm going to count that as a negative 1%, but I didn't take that position. I didn't take this one either. I only took this one in here that we talked about before for that 1 to 9. So that was another hindsight loss there. But anyways, after we reacted, I'm going to go back to the higher time frame now. After we reacted from, and you guys can see all this trading is because we're in a pullback phase now. And we're just hedging our buys. And now in here, we can see that when we reacted from that 15-minute level, we had that sell, but it didn't make a lower low. And we actually made a higher high in comparison with this swing point. So our re-entry could have been right here. Boom. That one. And then on the 15-minute time frame, there's a nice sell to buy within this doji candle. So that secondary position could have been right there. Obviously, the secondary position was not met. The first one was. So that one in and of itself would have been, and this one we have to put stops below the low, unfortunately. So 56 pip stop loss. But the risk to reward is still there. 1 to 2.5. Not the best RR, but still decent. So 2.5% return there and what you could have taken. I'm going to get rid of all this stuff. So I'm going to keep this level here. I'm going to get rid of this black line now. Now we're going to scale back into this same level. And it's just following the mitigation trend, guys. It's following structure and following these institutional concepts. That's really it. And looking at time and price. So we can see here that when we came into that level, we had the very nice reaction at 8:30 in the morning Eastern time and price, open of New York session, right? Between London and New York changeover. And then what we did do is in the afternoon in New York session, we swept all this liquidity. Swept the liquidity, huge sell to buy, and we broke the counter trend structure. Okay, so higher high was formed. Now what we can do is pull back into our most recent demand. And where is that? Sponsored move right there. Happened in New York session. It was institutionally sponsored. Beautiful reaction there, and we could have went long. There's another one in here that you could have taken. You can see that we cleared liquidity there. So sell to buy, break of structure, pull back into this demand. Stops would have been below the low. You would not have been stopped out, but I probably wouldn't have taken that trade. It wasn't the clearest, so I'm not going to count that. But that one's a very nice trade that you could have taken right there just as an additional position. Stops below the low, about an 18.5 pip stop loss, targeting all the way back up into our higher time frame objective in which we would have then sold it from. Very nice 1 to 7.4 risk to reward there. All right, so writing all this stuff down, we have currently only in just one trade from VIP, but I'm giving you all this hindsight opportunity as well. So now when price finally comes into our level of interest, all right, we came into it at 0.821. This should have been at 1 right there. Okay, we finally come up into that higher time frame level. Okay, this is the institutionally sponsored volume on the higher time frames, huge buy to sell that swept liquidity and came into our supply zone, just following the higher time frame structure. Low, high, low, high, low. So we want to pull back, high. Now, when we come into here, we don't want to be looking for buys anymore because we've already hit the objective. So we've sold it in there, stops above the high. And in this case, this one actually ended up playing out very nicely. Take profits, we're at 7.7, our overall take profit there. 7.7, 1 to 8.6 risk to reward, which finally was hit down here towards the end of September. Okay, so now let's zoom into what's going on within this region of price. So when we finally reach this area, now we can talk about scaling into these regions, right? It's part of the plan. If you guys followed that step by step, you would understand. We had the initial reaction, and it's tough because when do you understand, breaks of structure, counter trend, or confirmations? And in this case, you could have classified this as a high, a low, a high reaction from it, a low, failed to make a higher high, lower low, that could have turned into supply. And in that case, you would have lost that trade. But then you would have noticed the higher time frame structure. So this is just lower time frame, but the higher time frame structure would have been here. Now you're in a little bit of drawdown on these cells, but now we know that if we break this structure here, that would be good for a good mitigation to go short. So you lost 1% here. I didn't take this trade, I don't think. But if I did, VIP, please just remind me because I don't really remember. It's been quite a while because there's so many trades. But actually, let's count it as if I did take it. I'm going to add that as a part of the VIP percent return. So negative 1% there, I'll just call it, okay, just to make it fair. All right, so higher high was formed. We pull back, higher low. We're already in our higher time frame objective, so we can't be looking to buy off these demand levels. Because how do you know that price couldn't just reverse? We've come into the area of supply, so we need to be looking for shorts. It just so happened that we kept making higher highs and higher lows deeper into this overall objective for this distribution schematic. So let's see. Demand was valid here because we made a higher high. Pull back, demand was valid here because we made a higher high. Pull back, demand was invalidated because we never made a higher high here. We made a lower low. We've broken the structure, okay? So now the distribution has sprung. We have sprung from the distribution, and now we need a pullback to continue. Now, this is the one that we didn't take. We took the one right in here, and I'll go over that in a minute, but this is the one that you would have or should have taken, okay? Just make sure that that's clear. 821, I believe. Yep, there it is. Okay, so where is the counter trend structure here? So once structure has been broken, the distribution schematic is complete. We've come into our higher time frame objective. Now we need to be looking for pullbacks to go short lower time frame. So we're already in from here. We're just in a little bit of drawdown. Stops are above the most recent swing point up here. Okay, so we're still safe. But the counter trend that created this lower low was high, low, failed to make a higher high, lower low. This becomes our supply zone. Boom, supply to demand flip. Could have had a nice entry, stops above the high here, but we're here, doesn't matter. And then we rolled over to make a lower low. So in this case, this was not the one that we took in VIP, unfortunately, but I saw that hindsight. So I figured I'd show you because that would have been definitely valuable based upon our rules. So now that we have a higher time frame entry, now we're in profit. This is just an opportunity to scale in to get better entries upon, again, lower time frame trend, lower time frame supply and demand flips, lower time frame institutional concepts for a higher risk to reward. So you could place, 0.5% here and then wait for the other 0.5% for this one. But in this case, I didn't see this. I placed 1% risk there, but you could have done half and half if you wanted to. So 7.7, because we've come into our overall higher time frame structure, now we need to be looking for lower low, lower high, lower low, which is why we had our take profit at 7.7, which is down in here. In this situation, this situation, it was 7.9 because this was taking out sell side liquidity and that's psychological level. So 1 to 14 you could have made there. So I remember now this was the take profit for this trade. Some of the trades down here were at 7.7, which is right in there because we've already come below 7.9. So we were just looking for the next cycle level. Okay, hopefully that makes sense to you. So now we scale back out, or scale back in, whatever, and we can see that we again failed to generate a higher high because we came into that supply and we rolled over and made a lower low. This was the one I sent out to the VIP community as well. So we pulled back up into this level, just the last buy to sell. And it's also a 4 hour level of supply here. last buy to sell there. Just a zoomed out picture of that. So let's pull our risk to reward tool. This is a beautiful trade that we took. Stops above, I believe, the high here. And then this would have went at 7.9. It's going to provide, you can follow along with the percent returns, guys, if you maybe don't believe me or whatever, if you want to follow along yourself. 1 to 5.2. Perfect. Okay, so continuing now. So now that we are finished with this overall pullback, we cannot be buying anymore because now we are higher time frame bearish and now lower time frame bearish since we have broken structure lower time frame to the downside. Now we need to be looking for higher time frame lower lows. So again, higher time frame bearish, lower time frame bearish. Now we need to be looking for a continuation short. So that's another question you have to ask yourself. Are you higher time frame and lower time frame bullish or bearish, depending on which direction you're trading? Or are you counter trend to the overall move? We can be buying in here as long as, first of all, we've broken structure first to confirm that we are actually in a pullback phase. But the same thing applies. Demand to supply to demand flips, imbalances, sponsored moves. We can use the same concepts to trade into our higher time frame levels to then turn around and then sell them higher time frame to then scale in and place additional entries in the correct direction. Structure is so important, ladies and gentlemen. Very, very important. All right, let's continue here. So price continues to the downside, right? We've pulled back. We've made another lower low. What's interesting about the next opportunity is its time and price relevance. So originally we were looking for pullbacks back up into this level, and we can see we didn't get that. So there was no trade there. But the next one was this. This was the Asian range, okay? This is, for me, this is Asian session. We can see a fake out of the Asian low. London session, 2 in the morning, London open, manipulation, fake out. Enticing short traders below the Asian range. Pushing right back up to the upside, taking their stops. They put stops right above the high. Enticing the breakout traders to the upside above Asian high. And then we roll over to the downside, sweeping their stop losses. So the people who are short got the direction right, but not the timing right. So if you guys are finding yourself, getting the overall direction of the trade right, but just hitting your stop loss or, not making the full amount of profit that you could be, it's probably because you're not getting in at the right time. Time and price is very important. So this was a beautiful trade that we took. Now we can see high, low, and then these are the candles that formed a push to the upside, and then we fell. Now this, on a lower time frame, you could classify this as the demand to supply flip. We invalidated the demand because we didn't make a higher high. Obviously, we weren't expecting that, but the concept is still there, turning this into supply. So once we made that lower low, you could have pulled back into that level of price. So that could have been another trade that you could have taken. So pull our Fibonacci, excuse me, guys, risk to reward tool. You could have placed stop right there. That would have been a very, I wouldn't say risky trade, but yeah, if you're more on the risky side, that would have been cool. Take profits would have been at 7.9. So let's go all the way down to 7.9. So in this case, if you had taken that trade, you would have made 15%. But I'm going to put it back at the place that I would have taken it. So right there, 1 to 5. Still a great risk to reward there. All right, cool. The next one is, since we've made the overall lower low, we want to be pulling back. Lower time frame structure, we can continue to trade with structure. Obviously, if we broke structure back to the upside, it doesn't mean that we're bullish. It just means that we're probably seeing an overall retracement into some sort of higher time frame region, maybe within this wick, to be looking for continuation short, because this could have been on the higher time frame low, pullback, low. And on the lower time frame, it may look like a break of structure, but we're overall bearish, so we know it's just an overall pullback. But obviously, if it does go long and we actually do break this structure, then we would be higher time frame bullish. And that's what we need to be turning around and adapting to the market and looking for longs, because that's the swing point, in which is the higher time frame swing. Okay, so hopefully you understand that. Now, this is just the huge buy to sell volume being played off of that institutional manipulation from time and price. So this is another one we sent out to the group. We had a beautiful wick entry. And guys, this is how we can get wick entries on a day-to-day basis. Okay, this is how we do, because we understand where we're getting in based upon structure, based upon volume, and liquidity, based upon time and price, and knowing where these institutions are getting in. Because since we know that they're the ones moving price because they have all the money, us retail traders don't have billions of dollars to move price, right? They're the ones manipulating it. So why not follow along with them? That's why Smart Money Concepts is so awesome, is because you know exactly where you need to be getting in. So again, go all the way down to 790. And in this case, we took this trade all the way down for a nice 1 to 4 risk to reward. So 4% return there. Very nice trade. So now we can see that this created a big buy to sell. We swept buy side liquidity, now looking to target sell side liquidity. When we have sell side liquidity in the overall bearish trend and we get a sell position here, it just gives us more conviction, because since we have sell side liquidity, that's the next liquidity in which it's going to look to target, making this a profitable trade. So it just gives us an extra confluence. So let's now scale in. You can go to the 45-minute, 30-minute, 25-minute, just keep scaling in until you find something that's good. And now in this case, we're just continuing with the trend. So what did we form? Well, we had our overall pullback back up into our entry, and then we made a lower low. This was the last point in which we could have stopped and made a higher high, but we didn't. We made a lower low. So now we just pull back up into higher time frame level of interest, which is right in there, which happens to be, I made it 8065, because this is the supply zone that failed to generate a higher high. We had a higher high, pulled back, these bullish candles failed to make a higher high. That's when we started to make a lower low. We made the overall lower low as expected. So that is the region of supply, demand to supply flip. So that's the region in which we took another trade. We did call that out again. So we shorted it here in VIP. Stops are above this high here. And overall take profit is again 0.79. Click OK. 1 to 8 risk to reward. What are we doing prior to coming up into this level? We generate liquidity. We have to free up the liquidity for them to place all their orders. And now we can go short. Okay, now they can go short. They freed it up. Retail loses. We can see 1 touch of the trend line, 2 touches. They sell upon the 3rd touch right here, selling volume. That's probably retail. And then boom, right back to the upside, take their stops. That's why retail does not win. Okay, so that's another trade that we took. We zoom back out. We can see within this counter trend move, right? So we've made a high, first entry. We've made a low, second entry. And then we've made another lower low. This is the high that created this low. However, we reacted off of this demand here. We weren't looking to buy this because we're in a downtrend. We need to be looking to sell. We don't buy off demand in a downtrend, just as we don't sell off a supply in an uptrend. It's just dumb, because you want to be looking for an expected lower low. That's exactly what we had. But we had the reaction from demand creating this buy to sell. So that created that supply level. And we took that trade and we ended up losing it, obviously, because it came all the way back up, took our stop above this high. But it was just an overall pullback, as you can see. This is the swing high that created this low. So this is just an overall pullback in this huge expansion, pullback expansion move. Okay, so that's one that we lost on. Let me get rid of all these drawings. If we zoom out, we can just see the structure, right? Lower low, lower high, 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 lower low. And we just continue, we just continue with that all the way down. And we're just following the mitigation train within the correct direction of trend, introducing institutional concepts as we go to get these wick entries, understanding where we need to be getting in and at what time we need to be getting in. So unfortunately, we lost that trade there. We pushed all the way back to the upside. So what I was hoping for was maybe a deeper push higher. I thought maybe somewhere up here, maybe we could have had an overall retracement, maybe back up into, I think, up into this level. It wasn't the best entry, the best trade. It really didn't follow my rules 100%, but I did end up sending it out because it looked good. The reason for that is, because I disregarded structure, and that's something that I need to work on. For this particular trade is what I meant. I need to work on that. I'm very good with structure. I pride myself in my ability to understand higher and lower time frame structure. It was just in that case, I disregarded structure for that trade, in which I have learned from, and now I'm a lot better from, right? So we can see that we made a higher high, higher low. We've broken structure. You could have probably bought it up into here. However, we already came up into objective, so you would not have bought it there because you would have expected supply zone to react lower low, right? That's how we can understand the difference between valid and invalid. So we came up down into this demand. Why is this demand? Because higher high was formed, higher low. We did not generate a lower low. This was our last selling volume before the higher high was formed. A lot of imbalancing here. And look at what we were forming. Equal lows. We swept those equal lows very strongly. Huge sell to buy. reacting from that level. Higher high was formed. So I expected, okay, pull back into this level here. The reason why is because this is the last buying volume right there, creating supply, making a lower low. So when we pulled back, we broke through this supply, never retested it as demand yet. We finally made the higher high. So pull back into this level of demand. Also, this institutionally sponsored volume here. That's why we had this reaction up into the supply zone. So we ended up failing to make a higher high. That's when I looked at structure and I'm like, shoot, I should have seen lower low, lower high, lower low. But in that case, we lost that trade, but that was still very valid. So that was a negative 1%. I actually did buy it. Actually, I think I did buy it in here. Yeah, I did buy it in here. I bought it in there, right? So I had that wick entry. Higher high was formed, stopped to break even, take partials, but we came all the way back down, hit my break even. So I'm just going to say 0% return. But anyways, now that we have made a lower low, let's zoom back out and go to the 30 minutes so you guys can see. Zoom back out and we can clearly see high here, lower low, lower high, and we finally made that lower low. So I saw this as now that I know what's going on here. At the current time, I thought this was just a sell to buy to go long. But now I've adapted to the market and I can trade what I see and not what I want to see. And now what I see is that this was actually a fake out to entice short traders to then go long to take their stops, right? Because they're probably buying within this support, but they're also waiting for the breakout. So take their stops, entice the buyers above this high, run their stops. So this creates a huge buy to sell. And not only that, even if you didn't understand that, you would understood high, low, lower low. This turns into supply now. So where can we pull back into? It's not as simple as just pulling back into the start of the buying volume. You could do that, but the stop loss would have been huge. But look at what's going on in inter-trend, right? We pulled back, we generated this push up, reaction off of this demand zone, and we failed to make a higher high. And that's where we rolled over and broke the structure. So this becomes our supply, stops above the high. Okay, so that was a trade that we took within our VIP community. If I create a short right there, boom, there, take profit all the way down to 7.7. At this point, it's 7.7. The reason why is because we've already hit our take profit at 7.9, which was, excuse me. Well, actually, we have not yet. 7.9 was within here, right? We hit that take profit here at 7.9, which was right there. Okay, so now we're looking to attack to 7.9, which you could have done. But 7.7 was that next psychological point. Also was a part of if you scale out all the way to the left, a part of a prior demand zone, right? So that's why we had 7.7. So 1 to 8.9 risk to reward. So we'll write that down again. And now we just look for the same exact things. We had the reaction from the supply, counter trend, high, low, failed to make a higher high, lower low. We pulled back, mitigated, lower low again, but now we're just pulling back. Overall pullback. This is the high that created this low. This is just the overall pullback. So we can still look to sell it within that region of supply. Okay, so that's another trade that we took, having more sell-side liquidity. Sell-side liquidity, equal lows here, gave me conviction that we're going to look to attack that sell-side liquidity, which we did very strongly with the news, because news was just used as the excuse to move price in the overall direction and take liquidity. It's not random. Everything has a purpose. So in this case, here, I put stops above the high, not above this because this is the high that created this low, so above that structure point. And take profits are at 7.7. I believe that's where the take profit was. If I'm wrong, guys, please, make sure that I get this correct. Hold me accountable here. But I believe that's where the take profit was. So 1 to 8, get rid of that. Now we can see within this pullback, boom, 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 last buying volume sell-off, creating imbalance in the supply. Beautiful trade. That's another one we call within our VIP as well. So short trade there, stop loss above. You could put it above here or above here. We'll just call it above there, right? Right above the swing point. And again, 7.9, or excuse me, 7.7. So this is a 1 to 6% return. And obviously, all these trades hit take profit. I zoom out, 7.7 is right there. Finally hit it. Now we continue. And now we're just continuing with the overall trend. We were counter trend buying in here because we knew we had to come up into these two levels because higher time frame structure was bearish. So we were buying up into these levels, and now we've come into our last point of return. So now we can turn around and sell it. Then any correct direction trend trade on a lower time frame could be taking profit at the higher time frame, lower low, because that's what we were expecting to see. We're expecting to see another lower low below this level, down into 7.7, right? Pretty much down, way down into 7.255, but So anyways, now what do we do? Lower low is formed, pullback, high, low, high, or really our last buying volume in here before the sell-off wasn't really that clear. And then we end up pulling all the way back up into that region of price. I believe I did sell it somewhere in here because I saw this as supply, and we came into this supply here, and then we took equal highs right there, and we had a big buy to sell. We never cleared structure, which is my fault, which is why I lost. If I just had taken that into consideration, I wouldn't have lost the trade. Why? Because if this is going to be a big buy to sell that sweeps equal highs that comes into supply here, I would have needed to have seen that lower low first. We stopped and we pulled back, which is why we lost the trade. So that was on me. But anyways, had the entry, or excuse me, I did not enter here, but that's where you could have entered. Equal highs, finally ran it, buy to sell, all the way back down, and we made the lower low. So now we can see that this is the higher time frame institutionally sponsored buy volume to sell because we've cleared liquidity with this huge buy to sell. This is where the volume was starting to be influxed. And we actually broke structure here and here. We made the lower low. So now this is the high that created this low. We mitigated this supply zone. So now we can be pulling back to short. It's very simple type of structure, guys. And we can introduce these liquidity concepts to understand where and when to get in. So now, at this current time, I had these drawn up when price was down here. Our most recent supply zones were right here. This is unmitigated supply. This push-up did not come into this supply zone. Why is that supply? Because within the counter trend, again, it's just the same stuff, guys. I'm repeating myself over and over. Repetition, repetition, repetition. Trading is supposed to be boring. It's supposed to be consistent. So counter trend, high, low. This is mini trend, high, low, high, low, high, low, high. Low reaction off of this demand zone in here, failed to make a higher high, right? And we made the lower low. So that turns into supply, just lower time frame supply. But I also saw, just like we had on the higher time frame on NZDCAD over here within these two levels, 1 and 2, I have in here 1 and 2. Why? Because this is the intermediate structure and supply that we reacted off demand in here, but failed to make a higher high. So this is still supply. And we came up into it perfectly, rallied, came back up, and we just came back up. Stops were not moved to break even. Partials were taken, but stops were not moved to break even because we never made a lower low. We never cleared structure. If we did, then stops would have moved to break even. I would have looked to sell it again. But the second one was up in here because we have imbalance or straight selling volume, and also because this was our last selling volume here before the last buying volume to sell off. This was where we generated equal highs. Okay, that's where we generated these equal highs. We started to react from it because people were trying to trade short off the resistance, and that's where the buying volume was in flux on a lower time frame here to sweep liquidity, buy to sell. So this becomes that supply zone. Okay, that's why it's secondary supply. So we had the beautiful reaction today, looking to go short. We're in a little bit of drawdown on our first position, but in profit here. So I would call it, let's just say around break even total, right? Just for these two positions. Since we have two positions, you could have done 1%, 1%, or 0.5% and 0.5% there, something like that. Targeting all the way down. Boom here. I'll just do this. I'm just going to make it very quick. Stop loss on both can be above high since we have good risk to rewards. And in this case, we're going to go 7.5 because that's just lower low, lower high, inappropriate lower low, right? So in this case, 1 to 3 and 1 to 7. We're in on both of them, and we're looking to make a move to the downside. All right. So actually, I do think I sold it in here again, just because I saw the reaction and then the very strong move, and this was our last buying volume. So I think I did sell it in there, but I said be careful because we could come back up into that level. So I think I did lose on that trade, but that's okay. We're still in profit on all the other ones, right? This one and then a little bit of drawdown there, but still very good trade. That's why I don't care if I lose. 7.5 ultimate target will be 7.255, but I just really don't know if we're going to see something like this before we go short. So just to make sure we're trading alongside lower time frame trend here, I just get in and out very quickly. If we go like that and continue, oh well, we'll keep looking for pullbacks to short. But if we do get an overall pullback, hey, at least I took my profit out at an appropriate level, 7.5 psychological level, and then maybe holding a runner for our overall 7.2550, because that's our higher time frame objective in which we talked about at the beginning of the video. Okay, so those are my trades, guys. If I tally everything up, I'm just going to get rid of this so we don't confuse you. Go back to the 1 hour. To tally everything up, we took total trades of hindsight and the VIP trades I told you about, 25 of them total throughout all of them. I may have missed a few as I went through because I wrote all this stuff down the other day and I went through all the percent returns. So I may have missed 1 or 2 of them. So I apologize if I did, but that's why we have this video here so you can see all of them, every single trade that was taken, not just on NZDCAD, but across all the pairs that we sent analysis and setups for. Okay, so total number of trades was 25. The VIP trades totaled 14, and the hindsight trades totaled 11. The hindsight return was 39.6%. The VIP percent return was 42.7%, giving you a grand total. If you followed NZDCAD every single day for the past couple of months, you could have made 82.3% just from the basics of smart money concepts of our strategy. Very simplified, easy to understand, easy to apply. All it takes is a little practice and experience, and you can be doing the same thing here. And look at this, guys. Here's another example. So we're coming into our last point of return. We're still bearish. What did we form today? Equal highs. We ran the equal highs to finish New York session or finish London session today. And now it's looking like we have a huge buy to sell. So if we see something like this, big buy to sell, pull back, this would turn into supply for shorts. We just need a lower low first. Now we can be targeting equal lows and overall 7.5 for an overall lower low down in there. So again, looking at this, we swept liquidity. If we have a lower low now, that would be that huge buy to sell volume. Sweeping liquidity, coming deeper up into this supply zone, and then that would turn into supply here for a pullback to continue to add positions. So it's all about finding institutional concepts and applying them to the correct direction in which you're trading. Could be counter trend, could be in the overall direction of trend. If it's counter trend, we have to make sure that we're still following our rules because we have to make sure every single trade that we take is independent of one another. All right. So these are all the trades that we've taken. I hope you guys took some value from this. If you have any questions, as always, please feel free to hit me up. I'd be more than happy to help you. But guys, if you are struggling in your trading or not being able to apply the concepts that I teach or any other smart money concepts teacher teaches, or just any video that you watch on smart money concepts, it is not the end of the world because you may not be as experienced, and it does take practice and experience to apply these concepts. However, we try to make this very easy to understand, a simplified approach. We do not complicate things because trading does not have to be complicated. So if you are already proficient, I definitely recommend prop firm challenges. Go for it. Definitely get yourself funded. If you are profitable and consistent, more power to you. But if you are not and you're looking for a more systematic approach to the markets, that you're able to catch these types of trades across the board every single day, and this is just on one pair, guys, 82.3% in total, going through all those trades. And I'm showing you proof of them. And the VIP trades, 42.7%, right? In total, 59.6 for the month of September. NZDCAD took up the majority of it, right? So if you are interested in learning how we do this and getting that one-on-one mentorship help that you need, right, please feel free to go to my website, Aerial FX Trading, right up in here. Book a free call. Just fill out a couple of questions there just to make sure that we're the right fit for you guys. Obviously, the reason why we have these calls is we don't want you to just sign up immediately because we want to ensure that we can help you in the first place. Because who knows, maybe we can't help you. Maybe your mindset is different from ours. Maybe you're already proficient enough that you may not need our services. But in case that you do, and in case that we find that we can actually help you, then we would love to extend that invitation for you to join our service. But that's why we love to speak with you first, to hear your overall goals, to best come up with an actionable plan for you to take going into your trading. And even if you don't end up joining, you get our free beginners course, you get our free proprietary trading plan, and you get advice in our actionable plan that you can take starting that day to implement into your trading, even if you don't join us. But we just like to book a call with you to ensure that this is the right fit for you and it's the right fit for us as well. Just a couple of updates before I end this video, guys. Our psychology webinar will be on the 29th of this month, 2 Saturdays from now. And you please register for that. We have hundreds of people already registering. We only have a specific number of spots available. So please go to our website and click Psychology Webinar. Click this Join Webinar button and then answer a couple of the type form questions, just your first name, last name, and email, just to make sure we have your spot secured. And then you will be emailed your webinar link with the passcode 24 hours prior to the event. So on the 28th, you will be emailed that. Okay. So 2 days later after that, on Halloween, October 31st, we will be releasing our psychology course. Everyone who's a part of my VIP community, of course, you guys will be receiving that course for free. But if you wanted to purchase that course, if you are not in VIP, that will be available as well. And we're going to run a huge discount when that is released and a giveaway for that course on our webinar on the 29th. All right, so stay tuned for that, guys. But if you have any questions, please let me know. Hopefully this video helped you. Give this a big thumbs up. Like, comment, subscribe to the Trading Nut channel. Hopefully you guys took some really good value in here, and we hope to see you next time. So take care, guys. Have a good rest of your day, and happy trading.